Now from this class onwards, we'll start with the practical problems. You have problems under each of the methods, and I'll tell you which method is more important for you and which they will ask you very frequently in the exam. Okay. Now I told you methods of valuation. We have two. One is your net asset and the other one is the profitability. Net assets, you don't have further bifurcations, but under profitability you have lot of sub methods which comes. So first I will do a problem on net asset approach and then we'll go ahead with the profitability. Now talking about net asset, the name net assets itself says it is my assets minus liability. Only when you minus your total assets from the total liabilities, we call that term as a net asset. So your net asset, under your net asset, how you have to calculate your goodwill is, they actually tell the goodwill calculation depends on the purchase price. Okay, when I tell purchase price, it is simply your price that is paid if you have to buy a particular company. That is called as purchase price. So here your goodwill will be purchase price. PP means purchase price minus net assets. Okay, purchase price minus net assets will give you my goodwill. Purchase price will be given in the question. Net assets also will be given in the question. If net asset is not given, then you know how you have to calculate your net asset, which is asset minus liability. Okay, I will just do one problem for your understanding and then we'll start with the profitability approach. Okay. I hope you have written the theory notes. So now you just have to write methods of valuation of goodwill and write first method as net asserts approach. Okay, first I will write the formula and then we'll do the problem. So net assert approach, your goodwill will be purchase price minus net asset. Purchase price, purchase consideration all means the same. Net asset is your total assets minus liabilities will give you your net asset. Okay, so this is a formula to calculate your goodwill under your net asset approach. So just we'll do one problem. See, M Company Limited purchased the business of S Company, which was having a tangible asset of 2,50,000 and a liability of 75,000. M Company agreed to discharge the purchase price by giving 2,500 equity shares of 100 each at a premium of 10%. And you have to compute the value of goodwill. Here they will not tell you whether it is net asset approach method or whether it is liabilities approach method, whether it is super profit or average profit. You have to read the question and see which method they have asked. So if you see here, clearly says one company purchased the business of other company and they are taking over the assets, liability, purchase price is given. So this is a definite indication of net asset approach. So I'll just do this problem so that you will understand. So now as per the formula, purchase price is given. Net asset, you have assets and liabilities given separately. So first I will write, this is problem number 1. So first I will calculate my net assets. How do you calculate your net assets? Total assets minus liability. They have given you the tangible asset. Only one asset information is given, that is 2,50,000 minus liability is 75,000. So 2,50,000 minus 75 is 1,75,000. This is my net asset. Okay, net asset is done. Next is what? Purchase price. How do you calculate your purchase price? Here they have told the company is not purchasing another company for cash, but they are purchasing for shares. How many shares? 2,500 equity shares were issued at rupees 100 each. So 2,500 into 100 is 2,50,000. Okay. Along with this, they are also giving at a premium. Premium is at 10%. Okay. 10% means 2,50,000 10%. that is 25,000. Okay, so now premium we all know we have to add. Discount means minus, premium means add. So 2,50,000 plus 25, it is 2,75,000. This 2,75,000 is my purchase price. Okay, when they tell purchase price, it can either be in cash or it can be in shares. Here they have given you in the form of shares. Not only 2,500, but they are giving extra premium also at 10%. So 2,50,000, 10% is 25,000. So total purchase price is 2,75,000. Therefore, how will you calculate your goodwill? Purchase price minus net assets. So 2,75,000 minus 1,75,000. My goodwill is 1 lakh. Okay, so this is very simple net asset. They will not tell you use net asset approach. You should read the question and see which approach is being asked in the problem. Now we'll go ahead. Net asset approach is done. Okay, now I'm going to start with the next method. So I'll just again come back with the methods of valuation of goodwill. So here you have your profitability approach. Okay. Under your profitability approach, the first method that we have written is average profit. Under average profit, we have simple average and weighted average. First, I'll tell you the formula for simple average and then I'll explain you what exactly is simple average so that it becomes easy for your understanding. Okay. Now, in your simple average, now all these methods you're supposed to calculate your goodwill only. Okay, so I'm just writing the goodwill formula here. So value of goodwill under your simple average is given by simple average profit into number of years purchase. I'll explain what is number of years purchase. Number of years purchase will be given in the question. You should find out what is the simple average profit. So simple average profit is equal to, that is given by the formula, total profit of given years divided by number of years. Okay, this is the formula for your simple average. Goodwill calculation is simple average profit into number of years purchase. This is there in the question. You should find out simple average profit. The name itself says it is average profit. So take the average of the profit. How will you take? Total profits which is given in the question divided by number of years. I will just show you a problem so that you will understand. Okay. So now we'll go with the simple average method. So I am writing here second one, simple average profit method. Okay, write the formula here. So goodwill is equal to simple average profit into number of years purchase. Number of years purchase means, now say for example, if X company is buying Y company and they tell you number of years purchase is 3 years, which means that X company can earn the same profit as Y company for 3 years of time. So that goodwill is there in the market for 3 years. For 3 years you will have the same reputation for the business. That is called number of years purchase. Okay. So SAP into number of years purchase will give you goodwill. Therefore SAP is equal to total profits of given years divided by number of years. Okay, so we'll do a problem so that you will understand more easily. Okay, I will just read this. Now just write simple average profit method in your notes. Write the formula. Below that formula, write this theory. That is, under this method, previous year's profit and number of years are taken into consideration for calculation of average profit. Then, such average profit is multiplied by the agreed number of years purchase to get the value of goodwill. This method is suitable when the previous year's profit are fluctuating. Fluctuating means it is increasing, decreasing, up and down. That is called fluctuating. So write the formula, write the theory, and then we'll do the problem. Okay, I will just read the question. It's very simple. The following are the profits of Darshan Company Limited for the past 5 years. So 5 years profit is given from 11 to 15. The company was decided to value the goodwill of the firm at 3 years purchase. So years of purchase is 3 years of the simple average profit of the past 5 years. Compute the value of goodwill. They will not tell you use simple average method. We should only identify. In this question clearly they have told you of the simple average profit, so we know it belongs to the first method. Now if you look into the profits also, see 1 year decreasing, other year increasing, then decreasing, increasing and then decreasing. So it is fluctuating, so that is why we use simple average profit method. Okay, now I will just do the problem in the next page. Okay, this is problem number 2. So first we'll write the formula and then I'll explain you. We all know goodwill is SAP into number of years purchase. SAP is total profit divided by number of years. So as per the formula, what is the requirement? We should find out how much is our total profit. So how do you do that? First I write the years. See how many years is given and then I write my profits. Years is starting from 2011, 12, 13, 14 and 15. Profit is 3,50,000, 4,25,000, 3,80,000, 4,00,000 and 3,95,000. These are the profits which is given. Okay, these are the profits which is given. So now we'll just apply the formula. Therefore, SAP is equal to total profit. So take the total of all this. The total of all this will give you 19,50,000. Okay, so 19,50,000 divided by number of years. How many years you have? 5. So 19,50,000 divided by 5 is 3,90,000. That is your SAP. Therefore, goodwill is equal to 3,90,000 into how many years purchase? In the question they have told you 3 years purchase. So 3,90,000 into 3, my goodwill value is 11,70,000. Okay, that's all is a problem. So you just have to know the formula, substitute the formula and take the value of the goodwill. Now I have done the first problem for you. What you have to do is you should do me this problem. That is problem number, See, the profit of a partnership firm for the past 5 years were as follows. So 5 years profit is given. It was decided to value the goodwill of the firm at 3 years purchase of the average profit of the past 5 years under simple average profit method. So how many years purchase? 3 years purchase. Whatever we have done in this problem, the same thing you have to do. So write the question and solve this problem in your notes itself. Okay, now a simple average method I have done. The next method as per the formula is, as per the methods of valuation is your weighted average profits method. Okay, I'll again go back to the methods. We'll see what is the formula for weighted average and then we'll start doing it. Okay. Now for the weighted average, all this comes under your simple average profit only. Okay. So for the weighted average also, the goodwill formula is the same. Okay. Again here if you see, goodwill says it is weighted average profit into number of years purchase. Here also it was SAP into number of years purchase. Here it is, instead of SAP, it is weighted average profit. Therefore, your weighted average profit is equal to, instead of writing total profit, I write total product. Total product divided by, instead of number of years, I write number of weights. That is the only difference. Okay, same formula. In place of SAP I am writing WAP. In place of total profit it is total product. In place of number of years it is number of weights. That is the only difference. So we'll see how this particular method is done. Okay, so I am writing here second method, weighted average profits method. Under your weighted average profits method, first problem. Okay. Okay, just look into this problem. Kranti Company Limited proposed to purchase the business of Shanti Company Limited. For the purpose, it is agreed to value the goodwill at 3 years purchase. So value of years of purchase is 3 years. Of the past 4 years profit. So profit is given for the last 4 years. Do not confuse with this 3 and 4. Years of purchase is 3. Profit given is for 4 years. And the appropriate weight is also they have told. You have profits from 12 to 15 and the weights is 1, 2, 3, 4. If it is not given also, every time we take it as 1, 2, 3, 4, 5 only. Okay. The profits for the above 4 years is 15,000, 37,500, 45,000, 52,500. Calculate the value of goodwill under weighted average profits method. Okay. Same step. So first I write how you calculate your goodwill. So goodwill is equal to weighted average profit into number of years purchase. Therefore, your weighted average profit is equal to total product divided by number of weights. Okay. So first we should find out total product. Okay, again here also it is the same thing. Whatever we have done for the simple average, the same thing we are calculating here. So I am writing here years. I have here starting from 2012, 13, 14 and 15. Okay, 4 years. And then the profits that they have told is 15,000, 37,500, 45,000, 52,500. Okay. Now, total product. If you have to find out total product, you should first assign the weights. Weights they have told take 1, 2, 3, 4. If this is not given also, we will take 1, 2, 3, 4 only. Okay. Now you have to find out the product. How do you find out the product? Profits into weights will give you the product. So 15,000 into 1 is 15,000. 37,500 into 2 is 75,000. 45,000 into 3 is 1,35,000. 52,500 into 4 is 2,10,000. Okay, these are my products. Take the total. Here the total you will get 4,35,000. Okay, therefore your weighted average profit is equal to total product, which is 4,35,000 divided by number of weights. Total number of weight, if you see, it is 10. Okay, number of weights means don't add 1, 2, 3, 4. No, number of weights means the total of your weight. So total of my weight is 10. So therefore my weighted average profit will be 43,500. Therefore, how will your goodwill be? Goodwill is equal to 43,500 into number of years purchases 3. Please be careful, do not write 4 here. Okay, it is 3. So therefore, my goodwill will be 1,30,500. This is under your weighted average profits method. Okay. Now I hope these two methods are clear with you. So under simple average we have done, under average profit we have done two methods. One is simple average, the other one was weighted average. Okay, you have to just write the formula and then substitute the values, you will get the answer. Now we'll move ahead with the next method, which is slightly different from your simple and your weighted. Okay, you have to do certain adjustments and then you have to do the problem. So I'll go ahead with that in the next video.